Welcome to another video. Today, what I will be doing is performing a full multi-time frame analysis in the market, both from a technical and COT perspective by checking what we have from a non-commercial point of view. So what the biggest speculators in the market are currently doing on that actual pair. So by using the combination of the technicals and the fundamentals, by the end of the video, I will show you exactly where is the best zone to be looking for a potential trading opportunity. So I really suggest that you stick to the video until the end, because you will be also learning a lot of things during the analysis. Now, if you're new to the channel, I'm a top author on the TRADINGVIEW platform and I share free education and analysis on all my platforms daily. So I suggest you subscribe to the channel for more free education and analysis, and I will see you in the video. Okay, so there are actually a couple of very interesting pairs that I want to speak about in today's video, which are GBPJPY and Euro NZD. Let's start from GBPJPY because it is a very interesting pair also for the next potential trading opportunity. So let's start from it and let's make a full breakdown on the pair, starting from the monthly, going down to the 4-hour time frame, and obviously also checking what we have from a COT perspective, so commitment of traders, to see what the biggest banks and institutions are currently doing on this specific pair. So let's start from the monthly. Okay, on the monthly time frame, what we can see that clearly the market has been rejecting an extremely strong level of demand, which was in fact the level that the market respected. Here, starting all this move to the upside, then again the market tested the zone here and it got rejected to the upside, and again the market lately tested the zone here and got rejected to the upside. What we can also see as further confluence for the continuation to the upside is that the last monthly candle that we see here is the candle that the next one is supposed to fill in the wick. This is a pattern that we spoke about many times. If you see a candle that has a wick like this and this kind of shape, you expect the next candle to actually fill in the wick, and also made a YouTube video just about this candle, so you can go and check it out. Now, going down on the weekly time frame, what kind of situation can we see? Now, from a weekly perspective, there is immediately one thing that we can notice. In fact, the last weekly candle is this weekly candle here. The last weekly candle before obviously the week that we are actually trading in is this candle here. And what do you expect? You expect the next candle, so this trading week, to actually fill in the wick of this candle. So you have the exact same pattern both on the monthly and on the weekly time frame, as you can see here. And in fact, what happened this week? The market filled in the wick of the previous weekly candle in this case. Now, before this, what had happened? The market had created this weekly W formation. Now, after a W formation, what do you expect? You expect the market to give you a move to the downside. And in fact, that is exactly what the market had done, giving us a very nice move to the downside, which is exactly what we wanted to see. So from here, the market, this area here in the market, is a very strong supply area from which the market had created all this move to the downside. And if the market will go to test again this quite strong level of supply, from here we can definitely expect the market to show us a move to the downside and clearly basically to reject this supply area. So can we expect the market to actually go and test this level? Absolutely yes, is definitely a possibility. Just a quick reminder, make sure you comment below and you let me know which pair or topic you would like me to cover or analyze in the next video. So on the monthly, we have support and we want to see the move to the upside. On the weekly, we know that we wanted to see the continuation to the upside, which is exactly what the market is doing, and we want to see the market go and test this supply area. Going down on the daily, what we can see. Now on the daily time frame, what we know is that the market has created a very strong impulse to the upside from this low to this high, followed by this retracement that tested a very nice level of support, which was this previous resistance, now turned support at this area. And from here, what did we expect? we expected the market to give us the continuation to the upside, to basically create this impulse correction and impulse pattern to the upside. What we also had was not only the support given that by the previous resistance now turn support, but also the confluence of the Fibonacci taken from the low to the high of this impulse. In fact, the market had retraced to the 0.618, and in fact we wanted to see this move to the upside, and in fact we actually did capitalize on this move to the upside with students for a very nice 1 to 3 risk to reward. And just few hours ago we closed our trade to the upside for a beautiful 1 to 3 risk to reward to the upside on this pair. So where is the next opportunity for this pair? Now, before I show you how we will be approaching this pair in the future, let's first give a quick check at what we have from a COT perspective on the GBP and on the JPY. So basically what the biggest banks and institutions are currently doing on the two currencies. Let's start from the pound. Now on the pound, what we can clearly see is that we went from 35k net positions all the way down to minus 36k net positions. So we went from a situation where we had way more longs than shorts from an institutional perspective, with 76k longs and 40k shorts, all the way down to having way more shorts than longs, with 63k shorts and 26k longs. However, even if in the long term we have seen a shifting to the bearish side, what we can see in the short term is that net positions have been increasing, meaning that institutions have been actually buying the pound. And we went from minus 36k to minus 15k, with longs increasing from 26k to 46k. So clearly longs have been increasing, which is definitely great, and shorts more or less remain the same. So that is definitely a further confluence for this nice move to the upside that we wanted to see happening in the market. And if we go and see what we have from a GPY perspective, we can see that a GPY went from 34k in net positions all the way down to 19, meaning that the GPY in the short term was getting sold by banks. In fact, shorts were increasing from 18k all the way up to 31k. So clearly GPY getting sold, GBP getting bought, at least in the short term. We definitely wanted to see the move to the upside and we capitalized on it. So what is next? Now, as we said earlier, it would be great to see the market go and test the structure, the supply that we have here on the weekly time frame, as we have seen at the beginning of the analysis, okay? So it would be great to see the continuation to the upside to go and test this level. And in creating this move to the upside that we capitalized on, the market also broken a new structure level, which is this zone here. Let's use a different color. Now, this zone here, what kind of area it is? It is exactly the previous resistance, which is now turned support, right? And what this zone also is the confluence of support of the structure, so the previous resistance now turned support, with the Fibonacci taken from the low to the high of this new impulse that the market has created. So if the market from here will give us a retracement back inside of this area, then what we will have? We will have the confluence of the Fibonacci taken from the low to the high of the impulse. We will have the confluence of the previous resistance now turned support. So it will definitely be a very interesting area to be monitoring from a 4-hour perspective, because always remember, the monthly, the weekly, and the daily time frames are the best time frames when it comes to the direction of the market. But the best time frame for entry is the 4 hours, and obviously for the direction also combined with what you have from an institutional perspective. But definitely monthly, weekly, and daily are the best time frames for direction, and the 4-hour is the best time frame for entry. So when and if the market will give us a retracement back inside of this area, then at that point with students, what we will be doing? Inside of this area, we will be monitoring price action on the 4-hour time frame, waiting for the market to provide to us one of our valid entries. And as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a very good risk to reward and very good probabilities for the continuation to the upside and the market actually to go and test this very strong supply area. Now, actually, I wanted to also speak about a Euro NZD, but we already are above 10 minutes in the video. So anyway, since we are approaching the weekend, I will speak about Euro NZD in the next video. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis and education for all of you. Also, make sure you click the link in description because you will find the best program out there. So the mentorship program, which is structured in the best way possible, because first you learn all the rules of my rule-based strategies, and then you trade them live with me each and every day. I give you a new daily market breakdown showing you exactly how to apply the strategies with entry, stop, and take profit, as well as answering every single question that you have every day. So I really suggest you go and check it out, or I will see you in the next video.